My friends, what is going on? I hope this video finds you well. Thank you for tuning in. Wanted to make a quick market update. I posted on Twitter that this week I wouldn't ask for likes or anything along those lines. Hit 55,000 followers on Twitter. So thank you for those of you that follow me there and here. You guys know the deal. Please like and subscribe to the channel. Always helps the channel grow. The more traction these type of videos get, the more likely I am to make them. So, crazy week in the market overall. We had Powell, we had some mega cap earnings, we had Trump with tariff news 2 days in a row. So, I just want to go through a whole bunch of charts. Let's talk about some good, bad, and the ugly. Those of you that have followed me for any amount of time know I'm not just going to give you a bull case or a bear case, because the reality is anything can happen, right? And you got to be able to be ready to adjust on the fly. Friday's a perfect example of the market is just chugging along. Everything is looking great. And then Reuters was out there saying, hey, Trump said there's not going to be any tariffs or whatever. And the market is just ripping and doing well post Apple earnings. And then the administration comes out and is basically like, no, that's not happening. As a matter of fact, they're all getting hit with 25% tariffs come Monday or tomorrow, which would be today, which I think I saw that as of right now, there's a 25% tariff on both Canada and Mexico, and added an additional 10% on China on top of what we're already doing. I tweeted this out where I said, what you need to understand is it's not the tariffs themselves. What the market never likes is the market doesn't like uncertainty. Anytime the market feels like there is a clear path ahead of what is going to happen, you will typically see nice sustained moves to the top side. Or if the market truly believes in a lot of ugliness, you'll see nice sustained moves to the downside. Something like bringing out all these tariffs and starting a new, trade wars 2.0, if you will, that is what creates the uncertainty. I've seen everything from arguments of, dude, tariffs are going to make inflation way worse. And I've seen people saying, oh, this is just a way for other people to pay our taxes. And then Trump's going to give us the greatest tax cut and the economy's going to boom and everything's going to be wonderful. And so there's a lot of hot takes out there. I read charts, guys. Okay. So that's what I'm going to stick to. I'm going to stay in my lane, and I'm going to stick to when I make these videos, giving you my opinion about what I think based on the charts. So the charts on the major indexes are pretty ugly right now from a daily perspective of what happened on Friday. So for instance, on SPY that I've got pulled up here, we've got a bearish engulfing candle on increased volume at the top of an uptrend. Typically a sign of paused momentum, and we're going to have more downside coming. I talked about this many times. You can see here the red and the green arrows, where we have been in we made a high, then a lower low, then a lower high, lower low. So we've been in this staircase consolidation to the downside. We finally got a new structure move, which is we pushed out and we made a higher high. Then on Monday, January the 27th, we made a clean lower low. So now, like what I've been telling my team, is we need to see a strong move topside and make another high up here around that at least like 620 range for the market to overall really show that momentum. On Friday, we were well on our way. Like we pushed 610 at the highs. Looked like pretty much by midday that we were going to close at least up somewhere around like 613 to 614, make a new all-time high. And then, like I said, then that news comes out and freaking Trump, said the thing about the tariffs. Market just decided to pull back, and it got ugly into close. And then going into after hours, it was ugly into after hours. I think indexes were down like another 2-3 points. So if you're hoping for, as of right now, I think we're probably going to see a decent sized gap down going into Monday. If they somehow come out, hey, we've made a new deal, or, we're removing those tariffs or whatever. Because, he's pretty much just playing chicken with everybody right now. And he's in that full on like established dominance role. So if some type of deal is made, we might see a nice gap up. As of right now, I think we've got to go with the news. As I'm making this video here on Saturday at 6 o'clock my time, we got to go with the news that we know. The news that we know is the market was selling off towards tariffs. The tariffs are now in place. So I think at least going into open, we should expect some type of gap down. You can see this white line that I have right here that's at 662, but basically from that November top and then was resistance towards the end of November. Then we pushed above, and that's where we were floating above until Powell came out, threw cold water on the market. Then we went through the consolidation, broke back above. Now it was resistance, resistance. Now it's acting as support. Then it's we gapped above. We created an island top, gap down, push back up. The good news is we did fill the bear gap down, and we are still protecting our downward gaps. So I like that overall. The reality is we are still in a new overall bullish structure unless we start to make new lows from over here that we made middle of January. So that would be, those lows were 575. So only if we start to create new lows below that are we going to be in a continued bearish structure look. And then when you kind of win and out and zoom out, right, then it would kind of look overall like a double top if we start making that move. That is what it would take for me to get overall bearish. I've said many times, if you followed any of these videos, I won't start getting bearish at all unless we start breaking through these tops that were made down here around that 565 mark. Until then, I think you have to consider this as nothing more than an overall consolidation pattern. And now that there's news out here, the market's going to want to digest. I mean, the reality is this might be what happens until the market feels good about where are we going. We also still have a whole lot of earnings that are going to be coming up this week. I believe Amazon's one of the big ones. I'll double check that. We'll jump into those charts. But overall right now, the first line of defense that I'm really looking for is this kind of 600. The most bearish thing that we're going to do is we're going to gap well below that down to 595 or something, and then we sell all the way off and come back down here and potentially even fill this gap, which this gap won't get filled until 580. So I do think that is a very real possibility, but those of you, once again, that have been with me for any amount of time know you got to treat support like it's support until it proves otherwise. Same thing with resistance, which is why I was very bullish on Nvidia overall as long as it held 130, and then as soon as it got through 130 support, I became very bearish, and I'm not going to get bullish again on Nvidia until it gets back through that 130 support, which I think most of the chip charts look pretty terrible right now. But like I said, we'll get into that. So as of right now, definitely don't like the daily look. But when in doubt, zoom out. I don't think the weekly is the end of the world. I mean, once again, we had a clear rejection. I really wanted to close over about 605. Anything over 608 would have been perfect. But I don't think that this is just an end of the world weekly look. And then you've probably heard the saying, as so goes January, so goes the year, which basically means that anytime January is a positive month overall for the market will typically do anywhere between 15 to 20% in that year. So it doesn't mean, could there be an outlier year this year, all that kind of stuff? Of course there can, but numbers don't lie, people do, right? So the fact that January closed the month, we closed 2.69% to the green side, lets you believe that overall there could be another 15 to 20% top side in the market. I still personally believe, as of right now, that we are going much higher before any major correction. That is still what I believe overall. So, QQQ, same thing, ugly daily candle. Really, 515 is that support structure that I want to see hold on QQQ. I start getting pretty bearish on QQQ below 515. Right, at least till you come down here and start getting towards, the low 500 mark. But overall, very similar look on Q as there is to SPY. But if you consider, between DeepSeek and what happened with Nvidia and everything like that, the fact that overall Q started the week terrible, but then we had push off between Apple selling off, between QQQ selling off, between Nvidia selling off, between Microsoft having terrible earnings. The fact that QQQ held up okay, I think is a positive sign overall. IWM, I'm pretty sure I posted this look on Twitter, where this was the first day that, right before, 15 minutes before market close, IWM looked like it was having a nice breakout of this low volume pullback and consolidation and then this bull flag, and then like 15 minutes before market close, it came out there and yeah, we're throwing all these tariffs, and then it had a terrible day. Same thing on Friday. It was starting to push up again. More tariff news, sells off. So I don't love the look on IWM. The weekly's just kind of a spinning top look. Let's see how did the monthly close. But overall, monthly still is 2.5% green. So I just feel like there's a whole lot of doom and gloom out there with all the indexes having a green January. You would have thought it was, everything was crashing. On a monthly basis, you can see how important kind of this 223, 224 level is. That was all that monthly resistance right here. So the fact that it reclaimed it after a terrible December, I think is overall a good look going forward. So, like I said, I'm just a dude looking at charts. So that's the way I want to keep it. Tesla. So Tesla missed its earnings, still pushed up. Not sure why the highlighter's turned on. Still pushed up after earnings. This is kind of the big downtrend that I'm watching currently right now, which is where we hit its all-time high on that Wednesday, December 18th. Then you got a rejection on Friday, and then a very similar candle, Friday, January 17th, and then a very similar candle here on this past Friday. Things were looking great midday. We were really applying a lot of pressure. This internal support right here, right around 406, that's really what I wanted to see hold. But overall, it had a green day when the overall market was pretty ugly. So the relative strength still in Tesla, I think, looks good as of right now. I do think that there is a possibility for us to start the week, like if we gap down, you sell off, you come down here to around that 383 before potentially pushing on up and out of here. But overall, I still like the looks of Tesla holding that 380. If that 380 really starts to get breached, then I think that's when we got to look at that 362, 340. But its overall strength in some ugly market days, I think is a good sign. Also, too, there was a ton of call flow both on Thursday and Friday. Well over $100 million in call flow, and Tesla typically does well when that type of call flow is pouring into the chart. So the big levels that I would want to see from a top side standpoint is, first and foremost, you got to get some daily closes over 406. But really the big level is going to be that 414.50. And once you get over that, then the next big level after that is going to be right around 430. I think you start getting some daily closes over 430, you're making new all-time highs after that. But it's really going to be a little bit of how are we looking, tariff news, all that kind of stuff. Plus, these tops right here, right? Your rejections here is now kind of being your support resistance flip, which is always a good sign. So there's a ton of confluence. Market sells off. You come back down here right around 380. Even if it's short term, you can play a pretty good bounce. I definitely will be selling puts if we come down anywhere here in this 380 point. So I like that overall. But those are going to be your levels. You start to lose 380, that's a bummer. That's when you're probably going to come down here anywhere between that 340 to 360. I like the fact that it had a really ugly dip down to like 360 something post earnings, and then that got bought up and of course gapped up, sold off crazy hard. And full disclosure, I do have calls right now on Tesla. They're down about 10%. Shame on me. I should have taken profit up in here. I didn't. So I do have some calls on Tesla right now that are down just a tiny bit, but I still like the looks of it and I like the relative strength. That's why I held them over the weekend, but fully knowing we're probably going to gap down. But we'll see, right? We'll see. Meta, I made a bunch of times in my videos I talked about I thought Meta would see 700 post earnings. I didn't. The only reason, honestly, I didn't play it is because I didn't love the massive run into earnings, but still did well. It's kind of chopping around up in here. I wouldn't be surprised at all for these weekly EMAs to catch up and then continue pushing. Meta, I think, is still going to be one of the stronger names. Microsoft, I hate the look of Microsoft, and it was one of the ones I took $1,000 worth of lotto plays on Microsoft because I thought this was finally going to be the earnings that they could turn things around, and I mean, it just didn't. It was, all these EMAs were all clustered up right here. I really thought it was going to probably make new highs. I was wrong. It happens. It happens, but you still got to take shots when you like the setup. I was kind of watching this pennant right here. I like the V-shaped recovery off the whole deep seek stuff and everything. But now, this 420.55 level, which when we come over here, I just threw this one as kind of a support resistance flip. You can just see how much that matters. Now you got these EMAs slicing through. Microsoft, I wouldn't be surprised at all if it gets uglier before it gets better. I wouldn't even consider longing it until it gets around the 400 range. If it can recover, it's 200-day and 50-day moving average up here around the 430, then maybe, but it's just one that I'm going to stay away from overall. But yeah, I mean, it had gone nowhere, so I really thought this earnings, it was finally going to make some AI noise and stuff like that, but it didn't. SoFi, this is one that I hold shares in my small account. I don't love the fact that it's created this island top up here. So an island top is when you have a few days of consolidation. It can be more than a few days, but you have that consolidation and then it gapped up, right? That was the first part of the island. Then up here, post earnings, then it gapped down. So this looks like one that I wouldn't be surprised at all, especially if there's interest rate fears and bonds keep screaming topside, that it might come back down here towards around that 13, 14 range before potentially recovering. And then if it bounces back up, then you kind of got to be careful of a head and shoulder look up here. That would be dangerous. That's definitely going to be one that I would keep an eye on. If I feel like a head and shoulders about to play out, I would probably cut all my shares and wait for a dip buy back down here towards like the $10 range. But stop me if you've heard this before. We're going to treat support as support until it proves that it's not. Just like down here, right? There are some ugly looks down in here that it built that support off of each and every time. So we'll certainly see how this one turns out. MicroStrategy is an interesting one. I've seen a couple of different takes on it, and honestly, it's one of those charts that I can buy the bull and the bear case for. It's got earnings that's going to be coming up. I've seen some people say basically this is kind of a descending triangle look that it's broke out of. Now it's coming down here. Excuse me, I drew that one wrong. Yep, came down here, starting to retest. So with earnings, excuse me, come on. There we go. Kind of building this bull flag. So with earnings, it could break out and start moving that one. And I can see that. I really can. Another one that I've seen that I definitely agree with as well, we'll just use my highlighter here, is that it's kind of building out this bear flag right here, right? And it's going to have to do one of these. I don't think there's any question if it comes back down here towards 200 for any reason that's a great dip buying opportunity. At least your risk to reward is going to be topside at that point in time. But I don't hate either one of those takes. Overall, you've got the strong push. Volume is just constantly getting dried out right here. I view this as overall a corrective move that is happening, right? So yeah, I mean, I overall I lean more bullish than bearish on this look. I really do. Obviously, with earnings, you're going to find more about how the Ponzi crypto scheme is doing. Having said that, while talking about crypto, coin is one that I really like up here. You have this nice, strong volume move, right? And same thing. Volume is just getting sucked out. Earnings looks like it's not till middle of February. So any type of good crypto looks, and I think this one can move. Also, typically, anytime you see this look, when they break out of these long-term, whether it's falling wedges, bull flags, they'll usually create kind of a support line that gets compressed, and you're either going to have that move that then you'll get that just massive move that takes it out, or it breaks that support line and then you come all the way back down. So I do think coin is building up for a pretty solid move in either direction, so be on the lookout of that. If you play options on coin, the spreads can be crazy. Same with MicroStrategy, spreads can be crazy all over the place. So it might, right, if it breaks down, this entire bull flag might have to kind of do one of these before it goes all the way up and out. These previous tops over here around that 280 to 260 though, you certainly want to see this area kind of hold overall. If it starts to get below that, yeah, I think you'll slice through, probably come back up, bump your head off, and then come back down towards the low 200s. Around there, again, it's a great opportunity, risk to reward, being topside. But I love this overall inverse head and shoulders. You had the breakout, so it might have to work its way down here, retest that neckline before you get one of these. Patience, patience, patience. So even if there's short-term downside overall, I still think the overall move is up. AMD earnings are going to be early this week. It has been a chart that I've been incredibly bearish on ever since it broke down up here at 152. I tried to long it at 122. And then once it started getting daily closes below 122, I cut it. And at first, it had a pretty nice rebound. I was kind of like, dang it. But then as you can see, it's just in a series once again. It did make a new high here. But as soon as you saw a new low get made, then you got a lower high. Then you made a new low. If you make a lower high right here, I mean, I think that there's a good chance. I already told my Discord that $100 is the next place that I would be looking to long AMD. Because if you go out here on a monthly basis, which this is kind of one of those charts, though, that I do agree I think the risk to reward is long at this point in time because the sentiment could just not be worse on AMD right now. Like everybody hates it. Nobody's really expecting anything. But even going all the way back here to 2020, guys, this $100 range is a massive support resistance flip. So anything down here towards the low 100s, high 90s is absolutely the spot to take your shot, right? Just have a reasonable stop loss set up. But these are great looks. And like I'm certainly going to do it. I won't ever take, just a massive position or anything like that because that's just not what I do. But I think it's a great risk to reward opportunity. So post earnings might give you a great opportunity if it does poorly. Honestly, if I felt better about just the chips in general, I tweeted it out. I was like, most of these chip charts just look terrible, and it's because they do, right? But AMD might be one that surprises some people. So, and full disclosure, I'm kind of that contrarian thinker. But sorry, this is where I don't want to offend anybody by saying my ADHD brain. So I will say this is where my retard brain kicks in and starts going all over the place. What I just talked about on coin, right? You had this nice trend line here on AMD that it was just following its way up. Every time it bounced, actually broke above that 164.46. And then, I don't remember what happened here. Oh, sorry. There's that retard brain again. Earnings happen, gap down. Once it breaks that line, then you're typically going to find new lows. That's exactly what I was just talking about, like on coin. But overall, I still think this is an overall massive consolidation. I think AMD is going to be fine in the long run, but I said, if you try to catch the knife, sometimes you get cut a little bit. Nvidia had the DeepSeek news. Following day, you get the rebound. I tweeted, I said, it's reapproaching that 130 level. I would not long it here. And then all it's done is pretty much sell off since then. So you had a close below the daily 200 on DeepSeek day where everybody was freaking out and nervous and everything like that. And then you had the rebound day. And then since then, that 200 day has been acting as support. Friday was the first day that you really got another daily close below it. That is incredibly bearish to me. I said then that I think Nvidia is coming back to about somewhere between 100 to 95. I still think that is going to be the case. I wouldn't be surprised at all with somewhere in here, let me be super clear, somewhere in here I think is where Nvidia will probably find its bottom. If it starts losing that, it's in big trouble. But this is, we had that original move that a lot of people were saying this could potentially be a UTAD, and I certainly agree with that. But I kept saying that 130 support for me is the big crucial one. And what happened at 130? It bounced all the way back up to 150. So it's showing great support. And then what chart was I just talking about that created? Oh, SoFi. You have that island top look, right? And then as it approached that 130, as these EMAs roll over, so the short-term EMAs start to catch up. So the reality is right now, Nvidia is below all of its major daily averages. The daily 50, the daily 200, the daily 921, and the daily 5. Those are the main ones that I watch. And so therefore, Nvidia is guilty until proven innocent. It is 100%. If you are super bearish, so if I get pretty bearish on what I think is going to happen in the overall market, Nvidia is going to be my number one downside target / put play. Yes, I will absolutely look to long once we get down in there, but I think you're going to have some days where you can get some really nice moves on some puts, because this is certainly a stairs up and now elevator down look. Also, too, Jensen did meet with Trump. I don't know that we have a whole lot of details out about that, but if Nvidia gets good news, you're going to see a pretty quick rebound. But overall, for me, I just can't get bullish on this chart again until it starts looking good above 130. I don't remember if it was in my public video or one of my Discord ones. As I said, don't be surprised at all with this thing making a recovery and just kind of low volume floating up and creating a bear flag that then does this, and then you probably get a bounce. And if it starts doing one of these, it's just going to slowly work its way down. But we'll see. Time will tell. Palantir has earnings this week. And I mean, this thing is pretty much set up. Like, I totally see, people talking about an ascending triangle look like this. I'll be honest, I don't love a low volume reapproach to previous all-time highs. This thing looks like it could be a double top, right? Especially if you start to lose down here. First place I'll get bearish is if it gets below 70. But then if you start to lose kind of these mid 60s right here, you'll probably get one of these. You'll always get, a retest, right? It won't just go straight down. So be cautious. But you get some retesting and you start to come down like that. And I think it could be coming all the way back down to the 40s. Let's see if earnings isn't good. But we'll see. We'll see. It's definitely like MicroStrategy. They got these 50-50 looks going into earnings, and so for me, when the market is sketchy, it's either got to be the hell yes or it's a hell no, right? So anything that's even remotely 50-50 looking right now in the market is completely hands off, in my opinion. Now, Hood has been a major winner for me in the Discord this year. Originally bought a whole bunch of shares once we got above this 35 level, so up a decent. I actually have cover calls sold on it at like 58 or 60, so I'm getting a little sweaty. Earnings isn't until, let's see here, about middle of February. Looks like another couple of weeks on earnings, but this is just a stock that I really expect to do well. I've said multiple times, even back over here at 35, that I expected it to at least double. I think it makes new all-time highs this year. I really do. I think they're changing the game. This is clear accumulation that took place down here going into its markup phase. Yeah, I think it could be $150 stock by the end of the year. I really believe that. I love the look of Hood. I wish I bought it a little bit sooner. Really the time to have loaded up on it, like looking back on this weekly chart, was like all around that 16 area. That was a great spot. And obviously if you bought down in here, congratulations, you're up an insane amount. But I still think Hood and Oklo and SoFi, I think are three of my favorite charts overall. I posted, you can go search it on my Twitter, basically my top favorite stocks under $100, and some of them are going to do amazing this year, and some of them are probably going to do awful. Like I said, we'll find out in a year, right? Not everything I pick is going to be a winner. I know that right now. But Hood, I like. I don't know another way to say it, right? It's just I think it could be a winner. Let's see here. As far as meme stock goes, that's pretty ugly. So for GME, it bounced in here, but same thing. All very weak bounces consistently, very low volume. So I wouldn't be surprised if it's coming back here and testing that 25. Overall, I think it's still a pretty good solid structure. overall, you've kind of got this cup and handle look. Let's see what the retrace is looking like from the lows of the bottom. Yeah, so losing the 382. Yeah, so I mean, you can see that 25.38 is right around that 0.5. So anywhere in here. And then once you get below that 25, you're starting to get into that discount zone. So if you're a long-term believer, certainly 23. I posted that this could just, wind up being one of these. And then you can potentially get that move. Or you might get that move. It's hard to believe that, things could go too bad with how much cash that they're sitting on. And cleaning up the business with very little debt. Obviously, Roaring Kitty is still a massive part of it. Everybody kind of knows his floor is right around that $20 range. So you're going to see a lot of buying if it gets back in there. But yeah, I don't hate this structure. I think anything above 25 overall, you're still in more bullish than bearish territory. AMC is a perfect example of you caught that breakaway gap. This is where I bought some shares right up here at like 475, I believe is where I bought them. You started to get a nice move and dilution. And so I really think you're probably, I just don't even think you can, make the argument that, like I said, this was kind of the inverse head and shoulder look that I talked about. Then you got the breakaway gap. So I like the look here. I bought a couple hundred shares on my small account here. Now I'm just selling calls on this deal and we'll see what happens. I think that probably most likely thing is you're going to come down here. Then maybe you got to see if the double bottom is going to work for you. And then, but overall, I've repeatedly said you just can't get bullish on this chart until you're back above $10. And who knows if that's ever going to happen. Hopefully that box office recovers. Roblox is one that I love on a weekly basis. So remember this chart. Jump right back over to Hood. Let's go to a weekly. Whoops. Right? So Roblox to me would be like Hood right around that 25 range. I think it's a great looking chart. You can see I already had that 73.51. I've talked about this chart a couple of times. Needs to get above that. They've got earnings coming up, so caution. But at the end of the day, like this weekly look here where it really pushed through and then just kind of chilled. Circle, like honestly, 49 was the spot to buy on this one. I kept watching it in the Discord and I said, all right, I think if we can start getting above 55, I might snag some. And I just didn't. I just didn't make room in the small account for it. It was a missed opportunity. It is what it is. So now the next level I'm really kind of watching is this $70 level, but I think it has a lot of potential. I wouldn't be surprised at all if it's well over $100 towards the end of the year. It's a good looking chart. And then if things get ugly in the market, if it does dip back down towards 50, that's a great opportunity to buy. Anything towards, like I said, low 50 to 45 right in there, it's going to be a great risk to reward shot. I'll definitely take that one. Amazon is a chart that on an hourly basis, and honestly, kind of on any basis, I'm really digging. You kind of got this clear, obvious trend. And what did I say? Right? When it's doing something like this, it's either about to pop. If you break structure here, then you're probably going to make a new low below this. They've got earnings coming up, but you're probably going to come back down here towards about 223 or so. If we go out here on the daily chart, I like the consolidation that it's got going on, especially if you hold, right around that 230 range, which was all this previous resistance. Now it's all this previous support. It showed support right here. So a dip back towards 230 is absolutely a great opportunity to take a shot at this. But it's just a chart that is it's in an uptrend, bull flag, breakout, retest, move. Bull flag, breakout, move. Bull flag, breakout, come down towards this retest, move. I think Amazon is a clear winner this year. And if we go to a weekly chart, right, the weekly chart is a bullish engulfing candle. So, like I said, earnings are coming up. That's going to be huge, but it's hard to see a world where Amazon is not doing well in Q4 with Christmas and things of that nature, when the overall numbers on the economy have remained strong. Apple is a chart that I hate. I posted on Twitter. I bought shares down here around that 219 range. It was a little bit above it, almost 220. It's like 219.85, something like that. Great little swing trade. I sold before earnings to buy more Tesla, and then was a little sad when Apple was doing really well and opened up at 247. But this is an ugly candle, and kind of same thing, indicates more downside. Didn't make a new high. Now you're putting in a bearish engulfing candle, so it's probably going to come back and at least test the lows around the 219. Same thing, kind of like Nvidia. If that starts to get ugly and you start to get below that 200 average, then I would say you got to start watching out for numbers down here that are, yeah. If it gets below the 200, you're probably going to come test 200, but really won't get super bearish on Apple unless you start getting below the 186. But that's an ugly look, right? Because it took forever to make its way up here, slices down. Then you get that rubber band snapback rebound. That's just why you can't chase moves that are straight down or straight up, because you're always going to get that snapback move, right? Whether it's buyer stepping in or whether it's seller stepping in on a snapback top side. But now this looks more impulsive, like it wants to come down. But I would say down here on Apple, this kind of 219 to 220 is kind of like the 130 on Nvidia. Overall, especially with that 200-day chilling right there, overall, if you stay above 220, I think Apple's going to do fine. You start getting below 220, the conversation changes. Lightbridge is a chart. Full disclosure, I'm in it since I don't remember now, like $8, I want to say. Yeah, I bought like right around the $8 mark right here, so I'm only up a little bit on it. But it is a chart that I love. Let me back up here and kind of walk you through it. So first and foremost, on a weekly basis, you have this falling wedge. You have a strong volume move that breaks out. You have a low volume move. When people talk to me about how do you know if it's impulsive or if it's a consolidation move, this is what I'm talking about. So you have a huge volume move that is your breakout to your top side. Then look, the volume gets absolutely sucked out of this thing while it's consolidating, while it's just chilling. Who's going to win the battle, buyers or sellers? Then you have volume start coming in and start ripping through this thing. I think it is one that can absolutely move back up towards 28 level. And sorry, let me zoom out here once again. So if you just look at this on a weekly basis, excuse me. If you look at this on a weekly basis, you have all these tops right here that you're just hitting and rejecting. So if we get back in here, once again on a weekly basis, we take from our bottom to our high, back to our next bottom. That one extension pretty much lines up with that falling resistance. So and 30 would be a key psychological number. So me personally, if I do get this move and we start shoving up towards 30 pretty quickly, I will definitely take profits on my shares. It's a very small position. I own 300 shares, like I said, right around that 850 mark, but I potentially easily see a top side move in the 100% range or more just with shares. That's all I have. I'm not playing options on it or anything like that, but this is just, it's a great look. Very similar to Oklo. I've heard people say Oklo too. So it's either Oklo or Oklo. I say Oklo. I don't care. But same deal, right? When all of this volume was getting sucked out right here, this is when I snagged my shares at 22. And now I'm up almost, well, I was almost up 100%. Now I'm not. But this is one that I've sold calls on at $50. And it's getting a little sweaty. I've got till February the 21st. When's their earnings? February 25th. So maybe I get out of them by then. Maybe they get called. If they get called away right before earnings, I don't know that I think that's a bad thing. But this is still one that I think is a great look. If you think about, once again, what type of day the market had overall, relative strength, volume is elevated in this move upward, but it's not like volume that just drastically stands out like, oh my gosh. And here's why you have to wait and see. Like, just because like this candle was super ugly right here, right? On Wednesday, December 18th. This might have been when Jensen came out and was like, no, nuclear's dumb, or quantum's 10, 15 years away, or something like that, right? It was around that time. So you have a massive dark cloud cover, super increased volume, And then what happens? The very next day, it's up 14% and only made new highs and higher lows since then, right? So, as ugly as SPY's daily candle is, it's just why you have to wait and see. If somebody would have been super bearish and like, dude, I grabbed some puts towards the end of the day, I wouldn't have hated that. Only you came down and you're buying puts on support, right? From over here. Other than going, this is why it just treat the support as support until proven otherwise. If the very next day you would have gapped down and it would have sold off, then yeah. But you basically just going, okay, it's a super ugly daily candle, but yeah, but you're also buying puts on support. And what I say about these type of moves, typically you'll catch that move where you just catch a trend line that runs topside, right? And look what happens. Boom. And then it basically came back, retested, and then boom, move again. So there's nothing more bullish than failed bearish moves. Every time you got a bearish look in here, same thing, right? Volume started picking up on this bearish engulfing candle, but you had to wait and see. Bears no follow through. Bullish inside bar on low volume. That indicates it's not a strong move. And what'd you get? You got another, see here, 24. You got another 34% move topside. So don't get me wrong, I'm huge on volume and daily candle setups and everything like that, but that's all they are. All they are is potential setups. You have to wait and see. Same thing over here. If you bought this gap down and you were like, dude, I'm loading puts. Okay, well, that's great. You're loading puts on support. So trade support. Unity didn't have a great Friday, but overall, I still like this bull flag look. This to me is very corrective move overall. Same thing, following this trend line right here. So don't be surprised if it needs to work its way down here, before you get that move. I'm only in shares here. Right now, I do have 25 calls sold because 25 is a key level. So that's what I do. I sell calls at resistance levels. And yeah, we'll wait and see how that turns out. But I bought my shares at 22. I sold calls at 25. If I sell them at 25, collect the premium, cool. The goal is to make money, people. Rocket Lab on a daily basis, another one that I like. Strong volume move up, low volume consolidation in here and kind of this falling wedge / bull flag look. Also, too, if we get out here on the weekly, right? I mean, it's chilling. You go down to the hourly, just very clean moves. Did get a false breakout here, so be on watch for that. Same thing. Gonna watch this trend line right here. If you start to lose this trend line, probably gonna come all the way back down to 27 before getting a move out of there. But considering the day the market had, for it to have closed up, almost 2%, not too shabby at all. Like I said, same thing with Tesla. So when things are looking shaky, if you're like, well, I want to buy the dip, well, don't go buy the dip on something like Microsoft that just looks like total butthole at a really ugly market day, right? That's just not wise. You want to buy the dip on something on really ugly red days, I'm cool with that, but try to find the stocks that are holding up pretty well. Because if the market does rebound, if you're like, I think this is a shakeout, blah, 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 that's cool, man. Believe it's a shakeout, go find yourself a strong name to buy. If you're the person that's like, no, Michael Guyette is right, it's the end of the world, come Monday, carry trade 2.0, we're just calling them tariffs now instead of the carry trade, I think the world is going to explode on Monday, then you want to buy something like that looks terrible underneath this 200-day moving average, like Microsoft, or something like buying puts on Nvidia that looks terrible underneath its 200-day. So just kind of keep that in mind going forward when the market is having some crazy swings. Like I said, buy the ugly names in the weak market if you want continuation. Just like if the market is really strong, you ride the leaders, ride the things that are doing well. And then vice versa, if you want to be on the contrarian side of things. If the market is really weak, look for who's strong, look for who's green in that weak market. That's a good sign. And vice versa. If you're like, well, the market is really green today, I think it's about to go red because Trump's about to tariff toilet paper, then find something that looks really weak in a really green market, and that'll help you out. I hope this video was helpful to you. Yeah, much love. I'll see you in the next one. Have a good one, my friends.